Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show, episode 184. My name is Cyprian Francis, and broadcasting today from Mountain Time, AJ Brown. Good morning, AJ.
That's right. We're back where we started Trading Trainer from in Colorado. In fact, I'm not far where I'm staying from where in 2003 we had our first round of taking, you know, underserved youth and putting them through the same program that people are participating in now, and getting them off of, getting them all self-sufficient and on their own with making money off of money.
Yeah, and that was the more of the old school way, right? Now things are really moving fast. Things are at your fingertips. Uh,
Absolutely. When we did that in 2003, we did it at a public library, and they only gave us 30 minutes of DSL, digital subscriber line, access to the internet every day. So we had to we had to be quite efficient with our use of computer time.
which is why you have this end of day approach, at least for the most part, with the price movements and the price action. Looking at the markets, looking at the sentiment this week.
hmm
I'm thinking it's positive, right? In your notes this morning, we've retraced from that big move to the downside. We're not in a bear market anymore, I think, are on the headlines. We're back to kind of like flat. What are your thoughts on this week's market action? The S&P, the overall, major indexes, I suppose.
Yeah, absolutely. There's a couple things going on, but first of all, I've been a little bit irked recently because even big names in the investing world, as well as the folks, the talking heads on TV, radio, blog posters, they keep calling this an uptrend. And it technically is not an uptrend, Sip. We're in a up move, right? We've got a rally going on, but we haven't defined a mature trend yet. And when we get to that, and I'm showing some charts, I'll tell you what I mean by that. And so I don't want to totally jump in and subscribe to doing some, uptrend trading strategies. We're in a current rally. In fact, we might be towards the tail end of that rally. So I don't want people, because of FOMO, right? Fear of missing out. I don't want people jumping in and buying stocks right now. That's actually probably what the market movers want, is they want people to be buying stocks right now so that they could be poised to take that money.
Yeah, I mean, I saw a tweet to this morning that, or 18 hours ago, that's been going viral. You remember the movie, the Big Short, right? Uh,
Absolutely.
Yeah, so this is Michael Burry, right? He's the guy that was, the movie was based on. And
Right.
just yesterday they're like, Michael Burry reportedly liquidated his entire portfolio, and they lay out the names, and it's like, okay, well, that's a lot of money, and that's a pretty smart guy that maybe, he's giving us some sort of a signal.
Yeah, he was waiting to get a top price to get out on after having that pullback. That's exactly what a lot of big market movers are doing right now. They're actually, looking for opportunities to sell. So if you're like, "Oh, this rally is great, and the China US trade war is over," which it's not. So I'm going to start buying. I mean, you're going to be feeding right into the hands of the market movers who are looking for you to raise the price up just that little bit more so that they can get top dollar when they start selling.
And I keep seeing the word put, buying puts, which is the options
Protection.
version of also, taking a short position in a way, and
Yep,
or protection, right? So
that's
do you
right.
want to pull up the S&P? Because I'm curious on your
Sure.
take, because that 100% retracement is interesting, because we're almost at the 6-month mark for the year, and it's like, to start 2025, we probably are like almost at break even here, and
Mhm.
questioning where we're going to go next.
Yeah, so we can get into some technical. So this move that we're on, you can see. I'm going to zoom in here since we started this next, trend. This move up, SIP, it totally, it's a live move, meaning that we haven't found the top yet. So every time we get a higher close, I'm going to be extending this line that's kind of tracking the move. You can see my dotted line from when this trend started. This trend started on April 8th, but the most recent move started on April 21st. This is that rally move we've been talking about, but it isn't the direction of the trend, right? Um, the trend is what this trend is not considered mature yet, even. And what do I mean by mature? Well, in order for a trend to be mature, it has to have developed a channel. And a channel has a level of support and a level of resistance. And that support and that resistance have to be defined. A line needs 2 points to make it a line. So I need two tests of support and of resistance, and I don't have the one for resistance yet. So we don't classify this new trend as a mature trend yet. That's why you don't see my lines of support or resistance. So, yeah, the current move is a good move. It's a good up move. And if I pull up right here my rainbow analysis, you can see I'm in the green. So that's a really good up move. But the previous move was not a very good retracement move or retraction move. So again, I have to emphasize we've got a rally going on, but this is not the trend as we define it. We need to find a top. And then what's really going to define what comes next is where we find the next bottom. So I have to get a top defined, right? So I have to confirm, who knows, maybe the top based on what the trading is happening. Let me go ahead and I just noticed that on this particular drawing, I did not update it for yesterday's close, nor did I update the best fit trend line. There we go. Who knows? Maybe yesterday we hit a top. It just needs to get confirmed that that was the top, that it's not going to go any higher. But what I'm really got my eye on, SIP, is where do we go from here, right? Do we go about halfway this previous move? That would solidify for me that a new uptrend is actually forming, that we're actually going to have a mature trend and it's an up trend. It's not a sideways trend. If we pull back all the way, well, then I know that this was just a short term kind of excitement in the market movers, the ones that actually have the majority of the investments in there. They're thinking about, actually, recouping some of their profits, but then taking the market lower. So it really is what happens next that's going to give us clarity on maybe the next 3 to 6 months of trading.
Yeah, and it's more of like, if we do pull back, what is it going to be fueled by? Because it seems as
Right.
if the whole time we've been in this green area on your rainbow chart, it's been the okay, we're cool with China. Like, we're talking to China, it's not the end of the world. We're starting to negotiate. But if that falls through, then could that be a catalyst versus the slew of economic data that we've got, that each is kind of like has its nuance, but like, what's driving the market now? Like, we've talked about this a few times on the show, and it's
Yeah.
almost dangerous to kind of, you know I guess it's more dangerous not to be tuned into what the administration is doing, right?
Yeah. Well, and it's interesting. Okay. I'm going to bring up the economic calendar because this week we had some pretty good economic news come out that, you know, the way that the economy is not like a speedboat. It's not like one of those cigarette boats that they run, you see in Miami Vice running between Cuba and Miami, right? It's not one of those. The economy is a huge tanker that takes a long time to respond to changes, fiscal changes and monetary changes. So let's take a quick look. We got our consumer price index on Tuesday. We got our producers price index. So these are price measurements of retail inflation and wholesale inflation. Then we got the retail sales numbers on Thursday as well. And then later in the day, we actually got what's happening with manufacturing output. So if I could just take a quick look at each one of these, consumer price index, SIP, um, it's tame, right? It's coming down and it's at that level that the Fed had been hoping for. Maybe not, it seems to have dropped significantly in the last 2 or 3 months. So maybe not in the way the Fed wanted to get there, right? The Fed didn't want to sacrifice the economy for inflation. The Fed wanted to do like little tweaks here and there to slow it down slowly instead of slam on the brakes. But this is where the Fed wanted it to be. In fact, if you take a look at the next interest rates, right? You know, June, there was a slight chance that there would be an interest rate drop. Well, no, the Fed is not thinking of slowing interest rates anymore. At least that's the investor sentiment. Maybe in July, right? But you can see this is an interest rate drop. This is keeping the boat where it is. And this has changed over the last week and a half to even in July, not seeing an interest rate drop. And then in September, September, somewhere July, September is the current thinking that there would be an interest rate drop. It's moved, it's moved. It used to be May, June. Now it's, July, September. And by the time we get to December, we were before thinking maybe by the end of the year, a 3/4 point to a 1 point drop in interest rates. Now we're thinking more of a 1/2 point to a 3/4 point drop in interest rates. So the Fed is looking to not make these extreme adjustments anymore, mainly because things are kind of under control, but there's still that wild card with fiscal policy. But now take a look at what's happening here. If I take a look at producers price index, this is wholesale inflation, we're actually seeing some, deflation, not even deflation, but when you see these negative numbers, you're seeing actually constriction or recessionary type moves. So that's what's happening at the wholesale level, that, goods are just not moving. Maybe the stuff that's moving at the retail level is stuff that was in inventory, right? In storage. So people are buying that stuff, but makers are not selling stuff to the retailers anymore, right? The retailers aren't placing orders. In fact, then we take a look at retail sales over April, and they're very anemic. Compare that to what we saw in March. So March, all these tariffs were announced, but they weren't going to be put in place till April, and it caused a huge run up of people going and buying stuff that they were going to buy that stuff later in the year. And they're like, I better buy it now before tariffs are in place. So we had a huge increase in retail sales in March, but in April, I mean, the levels didn't change. So even people are like, okay, I'm going to stop purchasing right now. And then finally, industrial production, kind of like that wholesale inflation. I mean, it's flat. So, things have slowed down and it's trickling through the system. And it just got, it takes a month or two of moving these dials. So now, we've got this whole thing with China and the trade war supposedly coming to an end. It's not coming to an end. It's been put on hold for 90 days, right? And in addition, the tariffs before and after, the US now has 30% tariffs on China. That wasn't there before the trade war started. And China has 10% tariffs on the US, and that's only good for the next 90 days. But 30% tariffs is significant. For every dollar you buy of China goods, you're going to have to pay $1.30. You're now going to pay an additional 30 cents to the US government for what you got before. So even though it's down off of this crazy number of 145%, it's still at 30%. So things are going to be, pricey. And then because there's this expiration date, it almost makes me think, when you go to Google and you type in options theta decay or time decay, and you get these images, right? I'll click over here to just narrow. So you get this image. Now, this is an interesting image. You can see, let me see if I can blow that image up. Yeah, there we go. And let me just zoom in for you so you could. This is, how an options value that's at the money decays as we get closer to its expiration date. Now, if you pull up also some of these psychological studies of, procrastination before a deadline, it's so interesting that this graph of option expiration prices almost matches perfectly those psychological study where they draw graphs of how people react and procrastinate as an expiration date. That's why, last week we had Dan Passarelli on, and we were talking about folks that understand psychology are oftentimes poised better to be investors and traders than even, the traditional people think you have to have a math mind. No, you actually have to understand, human behavior. Well, I almost feel like what we're going to see with this, trade war 90-day armistice with China, this same pattern. You're going to see people start to, stock up on inventories at the wholesale level. And then, probably 30 days out from the expiration date, because we don't know what's coming next. There's not any transparency. We're probably going to see a huge run. Let's see if it's May now, June, July, probably in August when it's usually the summer doldrums. We'll probably see people doing a huge run to the stores like we did in March, buying stuff because of fears of what's going to happen at the end of the expiration of this trade war.
Yeah, and the news this week was Walmart CFO came out and said that they're going to start raising prices, and he directly correlated it to the tariffs. And I mean, that's a big retailer that's hiking up some prices that might influence those inflation numbers. But every time I see those inflation numbers and the talking heads are saying, "Oh, inflation is cool," and this and that, and I just live life, I'm like, there's no way inflation is cool. Like, this is crazy. So and I don't know how long that would take to display in the data, and or if it wouldn't, or maybe, being in California, I'm in a different part of the world and isolated in that respect. But what are your thoughts on the numbers? Like are they a little deceptive?
Well, inflation. So remember inflation, like the CPI, and I'll bring that back up really quick. The CPI is a measurement of how much it's changing from today's number, right? And so it's actually still up 0.2%. That means, prices, we don't expect them to pull back, right? Everybody thinks, oh, when we control inflation, it means that prices will go back to where a loaf of bread was 89 cents and eggs. In reality, unless you start seeing negative numbers and significantly negative numbers here on the CPI, prices are where they're at, right? This is the new normal. The question is will they go higher from here, right? So the Fed doesn't want to see prices go higher, but we actually don't want prices to go backwards either, because that would mean that we're in a recession. So you kind of want prices to just stay steady. So, the sentiment and the rhetoric is just out of this world. I'm going to control inflation, and that people subconsciously say, "Oh, good, prices will go back to normal." When people say to you, when politicians say to you, when monetary policy folks say to you, we're going to get inflation under control, it basically means prices aren't going to get any higher from where they are. So people better get used to, this is how much we're paying for eggs. This is how much we're paying for a loaf of bread. This is how, because that's the definition of inflation, right?
Yeah, and I have another chart that I can't stop looking at. Then it's these the home US home price history, right? And it kind of highlights
Yeah.
the bubbles. And I
Yeah.
remember that this was a leading factor to a lot of negative cash, right, coming into the market and creating a panic in a sense. And so
Hmm.
I directly see this, I don't know, having some having an impact, at least in lifestyle. I don't know how much it's affecting the data, but even just the Palisade fires over here, like they've only started construction on like 4 houses, and they're still all priced a million plus, etc. So these are, uh, I don't know if you have any thoughts on the housing market, but that's just a tweet that keeps getting, like, I just can't believe that this is real.
Yeah. The housing market has a lot to do with the stagnation of building houses for about 20 years. And so, population boom. It's just a supply and demand discussion. And so that has been trickling over as well into the rest of the economy. If people are having to pay these new higher prices for getting shelter over their head, they're not going to be able to buy those type of prices at service establishments like restaurants, or even your dry cleaner. People are going to sacrifice having pressed clothes for paying their rent or paying their mortgage.
Yeah, well, I it always captures my attention because it's such a important purchase investment for people, right? And then we've got all
Yeah,
these.
it's usually the biggest number one purchase that people make in their lives is their
Yeah, and
home.
we want a robust real estate market for the economy, for the United States of America. Those just numbers just worry me. I'm like, man, I don't know enough people that could afford all this stuff. Like,
It actually benefits, and I sometimes the business runners, the people who run businesses and I'm not talking about small businesses, I'm talking about big corporate. Sometimes they could be short-sighted because, if you're hoarding a lot of cash, it means that your base, your customers don't have that cash. It almost makes sense that, we want the majority of Americans to get kind of a push up in their basis, because then in the long term, medium to long term, businesses will have more consumers. So, you know, eh, we can hash out government strategies all day, but right now there's a lot of money that instead of flowing through the economy, people are holding on to it, putting it in their belts. So anything that, both on the fiscal side and on the monetary side, anything we can do to keep the money flowing is probably a good idea.
have you been, before we cut it to commercial? Have you been following the presidential tour of the Middle East?
I'm hearing bits. I'm hearing bits here and there. I've been following a little bit about the plane that Qatar wants to give Donald Trump, and the Donald Trump Library ultimately. I saw a little bit about Saudi Arabia. Each one is trying to impress Donald Trump a little bit more. It seems like. Why? Is there anything that popped out for
Well,
you?
yeah, and I'm trying to find it, but it's all of these, like, red carpets that they're rolling out for him. They're like
Yeah, they
they're
were
like
like
impressive,
horses,
like bring out the best
swords.
camels, and like they're all like putting on a show for Donald. And as an American, I'm like, this is great, right? Like they're showing respect, right, to our leader, and it sounds like they're cutting some deals. I don't know how that actually turns into dollars, but some of these are pretty like impressed. Oh, this one was pretty cool where I guess the Kuwaitis have like this city that like that they're building that like comes up and is very impressive. So they're doing a great road show, and I think maybe that's leading to this week's, a little bit of this week's optimism in a way where, we're out here shaking hands, making deals.
I think it's more about the tariffs on China.
At the end of the day, yeah, this is still the road show,
Yeah.
but it's nice to see, moving in the right direction. It's not, east west beef, and we're coming together to develop and make the world a better place. At least that's what it seems like. At least that's what it seems like. All right. Let's get your links page up. All right, folks. We are streaming live. AJ's got the charts in front of him. If you have some names, something that you're on the fence about, and you want AJ to take a look at it, feel free to throw it in the chat. Otherwise, head on over to AJ's Quick Links page, where we've got a bunch of goodies. We've got his social channels. Show some love on that YouTube. Hit that subscribe button. Instagrams popping off, TikTok, and then all of AJ's goodies, other goodies. We've got the free indicator suite. So as he's going through some of the charts, you'll see some green and blue arrows. I think it's blue, green, greenish, red and green arrows that are kind of, follow through signals. And then we've got a bunch of other stuff in there. If you're new to premium selling, and if you're new to options trading, click that register for free workshop. This is a great starting point to learning some of these initial strategies and utilizing options for your wonderful use. And then we've got, Trading Trainer in general, the entire program, some custom coaching, a bunch of good stuff for you to check out. Head on over there. Otherwise, sit tight. We're going to take a break. We'll be back. We've got our pick of the week. We've got our speed round, and,
Let's take a look at the VIX too when
maybe
we come back.
Yeah, actually, that's something I keep looking at, and I'm like, when's this thing going to stop? All right. Sit tight, folks. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. I'll tell you what, AJ, every day I have this VIX chart up, and I'm asking myself what's happening. And the past week, it's been heading back to that mean that you've described many times before. So what is your initial reaction? I mean, it seems like a good time to get on that previous trade that you had.
I mean, yes. I mean, there's a couple of things that I want to give people some forewarning about. So number one, the VIX is coming down. That means people are not using options as much to hedge against their trades. It's a sign of confidence, right? And so because of that, the price of overall options is no longer as overpriced as it was. We're not all the way down to where we had been between the COVID and now, which was down near 12, but we're at the mean, and this is still good for selling premium, because remember, no matter what the premium is that we collect, that goes to zero. So if the premium is $10, that's great. If it's $7, that's great. If it's $15, it's even better. So now it's in that mean. The implied volatility is returned back to its mean. That also means that when we get the good signal of a bottom, and we thought we had one on May 6th, on the evening of May 6th, but then it didn't materialize on an actual trade. As you can see here, we didn't get follow through on May 7th. We didn't get follow through on May 8th. And on the evening of May 8th, it said psych. We got the magenta arrow to contradict the light blue or cyan arrow, and so it went down a little bit further. But we want to be poised to put back on our VIX hedging trade whenever we get that light blue end of day signal followed by subsequent day follow through. That's the signal to put on your hedging trade. It'll protect, and this is to hedge not just a single position, but your whole portfolio. You could put 10, 15, even 20% of your portfolio into this trade just to keep yourself, protected if the rest of your trades go funny. So I wanted to make sure we highlight the VIX. Do you have any questions about the VIX? 'Cause I also want to show some more on the SPX.
Yeah, other than I can't believe how calm everyone seems coming off of that low. And
I mean, prices of gold have dropped a little bit. It's still at all-time highs, but that's also a sign that there's some confidence. And the price of Bitcoin has gone back up. It's been steady for about a week or two at about 103, $105,000 per Bitcoin. So that's telling me that people are getting their risk appetite back. Whether it's founded or unfounded is another story. But that risk appetite is back. We're seeing money coming back into the equities. So at least temporarily.
so I guess that 26 would be a level to continue to keep an eye on again, right?
Always that fear unfounded. If I'm trading between 12 and 26 on the VIX, this is a perfect place for me to be selling premium. And if the market yet hasn't matured, as far as I'm concerned, this little rally that we're in will end. And the market at this point, when we look at the bigger picture, and I'm going to bring back the SPX, is sideways choppy. If I look at like a 2-year picture, I mean, yeah, we just got back to the S&P being in the plus zone since January 1st. But this is completely just because we have this one rally. I mean, look, we just recently had one, bear jumping out the window. So we're just basically getting back to, parity. We're not we're not in any sort of uptrending market like I keep hearing. And so as far as I'm concerned, this is a premium seller's heaven. You want to be, poised to be making money in this sideways choppy market when this current move ends and we see what's happening next.
Did you have any? You said you had something else on the SPX that you wanted to touch
Okay.
on.
And this is so the VIX trade is number one. Get poised, look for that signal. It could come as early as next week for putting on your VIX hedging trade. But remember early in the call, I was talking about, we have to find our top and then the next bottom will make a difference. Well, if that bottom occurs about halfway, right? Uh, Wherever we find our top, cut that in half. If our bottom pulls back to there, and then we get our bottom, this shape, this pattern is classic textbook uptrending swing trade, bullish swing trade. So as we identify our top, once we identify our top, I'm personally, and I'm recommending you guys too, take an afternoon or an evening and look for candidates that are setting up for a swing trade, a bullish swing trade. And let's start watching those because, again, if the market does bottom at about that halfway zone, I mean, boom, 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 you're going to want to place some swing trades, some bullish swing trades. Now, it may not do that. It may pull back too far, but you want to have that. You don't want to be caught late to the planning game. I mean, again, going back to that whole discussion about those folks that are, they're now it's been over 20 years. They're all, old men now, but like me. But those teenagers, we only had 30 minutes to trade every day. So we did a lot of planning, and that's the whole basis of how I trade is I plan in the off hours. And so I want you guys who are watching this show to be planned and be prepared for, just in case this perfect storm, this textbook swing trade opportunity comes up. You want to be ready with your candidates and your option selections in place, your trade plans written out so you can capitalize, because that could be big if if the planets align for us. So those are the two things: fixed trade, bullish swing trade.
Yeah, and I can't imagine there not being some volatility given how much is in the system itself, right? And the noise that comes out of things. So it's nice to
Yeah,
get a couple days of calmness. I just I
to prepare. But you don't want to rest on your laurels, everybody. You want to be planning for all the different scenarios that could materialize out. If we're in our premium selling trading now, and don't just get caught up in the day to day, always be planning for the future. So you have to balance what are you doing day to day and what's materializing on the horizon.
So I don't know if we have a topic of the day or we just covered it, but there were two names this week that not that they're investing opportunities, but I'd love to discuss. One was Foot Locker, and that
Oh
was
yeah.
the big one acquired by, I believe, Dick's Sporting Good. I mean, that's
Yep.
that's an interesting little pop there, right? So
Some consolidation. I think that we're going to see some acquisitions and mergers for the next couple of years. We go through these periods of IPO and expansion and competition, but I think we're going to see a lot of mergers and acquisitions, especially since a lot of the oversight, a lot of mergers and acquisitions are kiboshed because of monopoly busting, right? Trust busting. But I think that that's on a low. And so I think we're going to see a lot of, companies consolidating their power by merging and acquiring. And that is a big one in the shoe world, right?
yeah, and I think it makes sense because they both operate similar models, except Foot Locker just solely focuses on shoes, and the Dick's Sporting Goods are always probably, I don't know, like 5 times bigger than a Foot Locker. But that
Yeah.
was
But
nice
just
to
think, I
see.
mean, remember, Sephora used to have its own stores, and when you have your own retail locations, you got to pay rent, you got to pay all the utilities. There's a fixed overhead cost. Now you're seeing Sephora as a pop up inside the Kohl's stores, so it becomes like this parasitic, mutually beneficial agreement to have your store within a bigger store. So I could see Foot Locker sections of the Dick's Sporting Goods. That makes sense to me, and it makes sense based on the climate that we're in, especially with all the online retailers, right?
Without a doubt. And then the second name that I kept seeing was United Health, and that was uh because of the federal inquiry into their
Mhm.
practices or something. So that was a big drag on the Dow for the week.
Didn't the
Um
CEO step
he-
down? This is the CEO that replaced the one that was assassinated, right? And he's already stepping down. Yeah, it's very interesting, this whole insurance market and what's going on and kind of the backlash against it.
yeah, and this week in California, here in LA, they just passed an increase of State Farm home insurance of like 37%. And it's like, that's crazy to pay for these overinflated homes to then not have enough water to protect them when there's fire. It makes you not want to be a homeowner
In California.
in yeah, in California. So that's a different topic. All right. Um
One more. What about and you turned me on to this earlier in the week. What about the S&P losing Discover? Was it the S&P or the Dow? I think it was the S&P.
the S&P.
Losing Discover and picking up Coinbase.
I like it. I think Discover is much more of a representative of the overall market than Coinbase. So
I
I'm
mean, it's the
surprised by
500 best stocks out there. You got to, it's based on performance of the stock.
is it?
I mean,
I
y-
guess.
it's also a little bit of a popularity contest, but yeah. So Discover. Does that mean that Discover is on its way out. I don't know.
I mean, I don't think so, but it's like you said, it seems like a popularity contest, and I don't know who
Maybe
gets to pick. But
Standard and Poor's.
Coinbase is a wonderful enterprise. I just whenever you hear S&P, you're like, this is what represents the economy, right? And so you would assume it's a good representation of all the businesses, but I guess not
I
anymore.
mean, the financial markets are changing, and crypto, like I think it was like 10 shows ago. By the way, I can't believe we're at 184. 200 is just around 200 episode 200 is just around the corner. We're going to have to celebrate. But yeah, um I think 10 shows ago I said one of the accounts that you need to have these days is a crypto wallet. I mean, crypto I think is here to stay.
Yeah, no doubt. All right, folks. Let's see. United Health. All right, we did kind of touch on that, but there's really nothing to trade simply because who knows what's going on with that company. But we do have
Look at
some
this.
goodies.
Look, I just pulled up the chart on United Health.
Yeah, that's why I was like, it's been dragging the Dow all week, and probably get the boot. But
Look at it. It was up at $600 literally a month ago, and now it's at 275.
yeah, I mean that could cause some cash strains on the books. Not to mention all the news that's coming out and the assassination. It's like that's crazy. So we want to avoid this. We want to find some boring names where we can make some more predictable
Absolutely.
type of setups. All right, so let's go ahead and dig into the charts and some analytics. So a name that you're liking to start the week is American Airlines, ticker symbol AAL. What are you thinking, AJ? What do you like?
All right. So American Airlines, it's an airline that's been around. It's one of the, I would say American Airlines and United and then Delta are the three big ones here in the States, moving a lot of people. American Airlines is it looks like, and the signal just is forming right now. This is an end of day signal that's forming right now. So I really don't want to pay attention until the market's closed, but you can see my little magenta here. In fact, I'm going to do something if you guys have downloaded my indicator, this is something that you can do that I actually am telling a lot of people. Um, I like to have an additional validation in my end of day signals. Usually the MACD signal, like I have pulled up here, is calculated on the close price. That's the typical. But I made it when I, had this indicator created for you guys. I made it so that you could actually choose which price your indicator is calculated on. This one's a very interesting one where you take the high, the low, and the close, and you take the average of that. Divide by 3. That means you're taking into consideration the true range of the bars, whether we've got a volatile day of trading or not. That's going to get reflected in whether you get a trade signal or not. But the other one I really like is using the volume weighted average price, the VWAP, rather than close, because if there's no volume, and volume is always the great validator to price action, if there's no volume, this will prevent you from getting a false signal. So I've got it calculated on VWAP. You can see a signal is materializing. Again, we don't want to really, give it any sort of credibility until the market's closed. But if we get a signal, it means that we've been testing this $12 top that we established back at the end of March. That means I want to be ready to go ahead and either short some American Airlines or buy a substitute options. An American airline has a really great, robust, heavily traded options chain. So the substitute option I really am attracted to is the American Airlines January 2026. So about 7 months till expiration, $17 put. That would allow me to buy something that profits if the underlying symbol goes down. And so what I'm expecting to have happen is that we get our follow through signal to this um, down, this end of day top signal. We get our follow through saying, yes, American Airlines is going to go down. We buy that put or we short the stock. It doesn't matter, but I actually am attracted to buying that put. As the underlying symbol goes down, that put appreciates, and I'm actually expecting the underlying symbol then to find its footing between about 9 and 10. That's what it did for a whole month there. So I actually feel like investors are going to then start, they're looking for a little bit of a pullback to buy this at a bargain. When they do that, I'm actually going to sell them a protective put. I can do that because I've either got shorted stock or I've got this option substitute in my portfolio. So that allows me to sell people insurance. So when they buy the stock and buy their protective put, I'll be the one selling them that protective put. That gives me an opportunity to make some money. And if the stock is going up, which is what will happen if it finds another bottom, the likelihood that they use that protective put is going to be almost nil. So I'm basically going to be in the protective put selling business. That's what premium selling is. So I'm looking for follow through to today's end of day signal. I'm going to buy that substitute put option. Again, it's the January 2026 $17 put. And then I'm going to basically wait for a bottom to be found and get into that put selling business. I think this American Airlines is going to materialize to be one of those premium selling trades that just stacks our portfolio for the rest of 2025.
Yeah, and from a pricing and
Totally affordable.
yeah, like how much you need in your portfolio, how much you need to risk. This is like those $10 names are spot on of those sweet spots
And
with
it's a
like
company that's not going anywhere. And even though, people have kind of, I assume that the reason why the stock price has gone down is because there's all this stuff in the news about the safety of the airlines here in the United States and the air traffic controllers. So that sentiment has caused, people to sell their position. But it looks like we've bottomed out at around $9.50. It looks like we're probably going to top out at 12. And again, I'm not going to trade until not only do I get today's end of day signal, but I also get follow through. But that 9 to 12 range, that's what we love for premium selling of a pretty boring stock. But it's a boring stock that makes money. They're a company that it's like the little engine that could. They're going to keep going, and we're just going to use how investors are reacting to, what's in the headlines to make money off of this.
yeah, and I don't know how closely you follow those air traffic controller, but I believe this week there was some congressional meetings where they were discussing it, and it sounds like a serious issue. Like if we're
Yeah.
going to continue to have this mass transit across America, international connections, we need to get that in order. And I don't want to blame DEIE, but it sounds like that might have caused an issue in like the supply of these talented individuals that we need. So we need to just figure it out. And there's something about like if you signed up, you would get a bonus, and the people that were already air traffic controllers were upset that they wouldn't get the bonus, and they never got a bonus. And I mean, it needs to be fixed. So I
And
mean,
also the technology extremely outdated. I mean, I may be out on a line here, Sip, but some of these things that um, it's almost like you want to get the best talent and you want to get the best technology, and you don't want to worry about limiting the budget for these things, right? You want to, like with our trades, we always prepare for the worst case. You never want that worst case to happen. So you don't try to nitpick and come in at, you want the best in place, and you don't want to let that, and then you want to maintain it. You don't want to let that technology get stale. You don't want to be influenced by, culture things. You just want this thing to be, fail safe. You don't, this is not something that we want to, let the market efficiencies take care of. You just want to buy the best stuff and have the best people going at it, right?
Yeah, especially if we're protecting our citizens and ensuring their safety. So I think we would all get behind some sort of action that got us closer to that.
Yeah.
Okay, 10 minutes left in the show. We've
Nope.
got 3 names in our speed round. Let's go ahead and run through them. Mike, out of your territory now, Boulder, Colorado, is interested in Broadcom, which I love seeing the ticker AVGO. What do you
Avago,
think?
yeah. That was so you guys might remember, and I think Mike, maybe I turned you onto this. You guys might remember that I made a really pretty penny. I bought some put options at 25.40. I sold them at 62.30, right? Well, then I was ready to do it again. In fact, I got a signal to do that, but I never really got my follow through on it. And I actually did pull the trigger on another one of these trades, but then got quickly the reversal signal. So I didn't make any money. In fact, I wound up giving some of this money back. It was very little, though. It was basically, a break even trade. But again, I keep talking about this setup for a swing trade. And do you see how this pullback occurred to about the halfway zone before we headed back up? That's the textbook swing trade. So I'm not sure, Mike, if that's what happened to you as well. If you got into another bearish swing trade only to get stopped out at a break even or a loss, but hopefully you reversed course and saw that this was the perfect swing trade to come up. At this point, we're looking for an exit to that swing trade. This is a bullish swing trade. I don't want to jump in on Avago at this point. I don't want to, if you didn't jump in when we got the reversal signal right here, I don't want you to jump in now. What I want you to do is I want you to wait for it to do another setup. So again, you'll take, let's stop drawing with the magic marker. Let's actually draw with some lines. So you've got this line here. See if I can, there we go. You've got this move here. And what you want to do is watch the pullback. And if that pullback goes to about the halfway zone, and you could use some other leading indicators for that too as well. You could use the Williams percent R, you could use the stochastics, whatever. But have it pull back to the halfway zone. And then if you get your confirmation for another swing, jump in here, not here, right? Here. So let it pull back. Let it cock back up, and then the next shot. And if you did jump in here, you reverse sales quite quickly on that other trade. Congratulations. You're looking for an exit here. In fact, I'd probably be using a trailing stop at this point to get out. So I'm not sure where you are in the cycle of these swing trades, but man, Avago has been making my year in just a couple of trades. I hope it's doing the same for you, Mike.
Yeah, I feel like it was a leader in the Nasdaq this week in the big Nasdaq move. All right,
Yeah.
another name that gets thrown around with the Nasdaq. Cheryl out of Phoenix, Arizona wants to know what's the play in Intel, ticker symbol INTC.
Are you bringing this up because of Dan? Dan mentioned just quickly, and I noticed a lot of people picked up on it. Dan last week on our show mentioned Intel and that he had been, looking at it. So maybe this is what you're interested in. Hey, so let's see. This has been one on our premium selling watch list for forever. It's been one of my faves. It's been one that we can, nicely sell premium on. It hit a bottom. I got an end of day sale signal on April 22nd, and I got a follow through on April 24th. So, that was my buy point for getting into this. And then it kind of pulled back and it made a lot of people get kind of antsy. but none of these signals materialized. We actually got another bottom signal. So if you missed this buy point here on April 24th, there was another one just last week, last Friday, May 9th, was a great follow through signal. And they were at about the same price. They were at this $21 mark. And so now we're just letting this thing go up. I see what you see, maybe. You see that we're materializing with a top end of day signal. I have a feeling that we're not going to get the follow through. It's going to be like this signal here, where you get the end of day signal, no follow through, and then it's quickly retracted. So I'm expecting that. I'm expecting us to go as high as about 25, 26 bucks. So what do I think for you? If you did fall here, I know that you've probably been white knuckling. If you bought some of the stock or you bought some of the substitute call options, I bet you've been a little bit uncertain. And now with this signal materializing, sentiment around Intel is just kind of slow but steady. And every once in a while, people get the jitters, but I'm still in it, right? Meaning I've got the stock in my portfolio. I've actually got the substitute. Intel has another robust options chain. So I've got a substitute call option that's not expiring until January of 2026. I think it's like the $15 strike price or something like that. And I'm just waiting and being patient and not getting too jittery, letting it do its slow climb up. And then once it does finally tell us that it's at a top, that's when I'll go ahead and sell the call premium, and I'll go ahead and buy myself a protective put down here around the price that I bought into it. That creates that perfect collar that makes us money, month in, month out. So just stay the course. Don't get too excited. At the same time, I don't think that I would be looking for any sort of, if I didn't get in at the $21 mark, maybe if it pulls back again and gives us another signal, I try again at the $21 mark. But if it, goes higher from where it is and I can't get in at that price, I think you just wait patiently for it to cycle so you can try again later. So if you're not in it now, unless it drops back, pulls back, and gives us another buy price around $21, you might have missed that opportunity. If you are in it, stay in it. Don't lose faith. Just be patient. Don't act prematurely. Follow your plan. All is good.
Yeah, and it seems as if they might be improving some of their approaches to their business that is very, tech friendly these days, at least in terms of some chip manufacturing, if we can get it, back at home. All right, our third and final name, something that might be affected by all the tariff news. Richard in Milwaukee, Wisconsin wants to know, do we have an opportunity in Harley Davidson? Hog, are people buying less motorcycles, I guess?
I mean, Harley is, it's interesting because, I don't know if you've looked at the price of a Harley lately, but it's almost like they've priced out their core consumer, and now they're just focusing on those more, the wannabes that have big pocketbooks, right? Okay. Again, Harley's a great company, run very well. They give a lot of money back to their investors. There's just been a sentiment that, investors have been pulling their money. But I guess you're wondering, do we see a bottom? And technically, we got a bottom signal that I'm looking at right here. I'd have to look at my intraday charts, but I got an end of day signal on April 14th. It doesn't look like I got I got follow through on April 24th. So somewhere between $23 and $24 a share. Then I got a bunch of signals that canceled each other out. I'm actually expecting this signal to cancel itself out. I doubt that that's a top. But we do have some heavy overhead resistance here at about 26 bucks. So if you got yourself in here at the $23.50 mark, I would hold tight. Again, don't jump the gun just because you got an end of day signal. Listen carefully. An end of day signal, first of all, needs validation. So don't trust an end of day signal if there's not volume validation, if there's not some preceding price patterns. Go use your candlesticks, use, whatever price, whether you use Western or Eastern. Get some confidence behind that end of day signal, and then make sure on the day of trading, which would be a subsequent day, you get the follow through. And if you don't get the follow through, don't trade anyway, right? End of day signals need subsequent day follow through. And so that's one of the big things I want to implore. I've seen so many people who get an end of day signal. The next day I don't get follow through. And so I put a survey out there, who got into the trade. And a whole bunch of people, like 40% of them say, well, I got into the trade. And I'm like, why did you get into the trade? There was no, follow through the next day or the subsequent day. Well, because I got the end of the day signal, I thought I'd just get into the trade anyway. So don't do that. Trade your plan. And so, yes, we might be getting an end of day signal today, but don't trade it until you get follow through. And I would actually say to you that let it go up. Let it go up to $26, $27. Then sell your premium, right? And if you haven't gotten into it, I think $26, $27, we're going to see a reversal. And if you want, you can then trade the other direction, short it. I think that the range that we're seeing here is anywhere from about 22 to 26. That $4 range could be our premium selling range. You could do something with this.
Yeah, I think it's one of those human things where you naturally want to jump the gun and cut in
Don't
line
do
and
it.
get it
We
early.
spend so much time creating trade plans. Plan your trade and then trade your plan. If you don't do that, you're not disciplined. And then you maybe shouldn't be doing this type of, active investing or trading, right? So discipline is everything.
That's right. And if you're having trouble with that discipline, head on over to our QuicksLink page, sign up, grab that indicator, hit the follow channel, follow along some of those tips.
Join our program, man.
Join the trading trainer community, get some coaching. All the goodies are here, and you'll have like-minded individuals every week in similar situation, talking things through. So the link to that is in the chat. Head on over there. AJ, thank you for your time today.
Yeah.
Heading into the weekend, heading into next week, I'm assuming you're just kind of waiting to see how things unfold.
Yeah, I'm, like I said, I'm looking for that perfect opportunity to place that VIX hedging trade that we talk about so much on this show. So probably next Friday, we'll be talking about where I place that trade. The next thing I'm doing is I am planning out at least 5 swing trades that if the planets align in the next couple of weeks, that I can then just pull the trigger and follow my plan. So I'm doing that now, 2 weeks in advance. And even if it doesn't work out, I'll have those for later. So it never hurts to plan some trades, even if they don't materialize.
Yeah, and if you're interested in what that looks like, head on over to the YouTube channel. We have a couple of the VIX trades. Just put in VIX in the search, and you'll see some of our previous videos. Otherwise, thank you all for tuning in. Please show some love. Hit that like, hit that follow, hit that subscribe button. If you have any questions,
tell your friends.
That's right. This weekend, while you're hanging out, enjoying the lovely weather, springtime is here. We're getting out the house, we're exercising a little bit, and yeah, we'll be back next week. I think the president will be back from his trip. We'll see where we're at with tariffs. We'll get some economic news, and we'll keep you guys posted on what's happening. So thank you all. Thank you, AJ. Have a good weekend. Have a good weekend, everybody.
Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh